It's your boy Crypto Blood, and welcome to another episode of My Two Satoshis. What's going on, people? It's February 22nd, 2018, and it's Thursday, one last day before the weekend, people. What's up? How you guys doing? I want to give a shout out to my man Ronell Goodwin. He wanted me to play True Last Dance, and that's for the old school cats. Old school hip hop down south cats. True was a group that I think Master P, No Limit made up. And I remember a few True songs. I don't remember this one, but I wanted to definitely get this one in for my man. Funny story. I was at my mom's house the other day, and she was like, God, why do you play all that rap stuff, that cussing and stuff in your video? She was trying to show her church ladies. She was at church. She was showing them, that I had a YouTube channel about Bitcoin and cryptocurrencies and stuff. So she started playing a track at church, and boy, was that a mistake. I don't know what song what video she was playing. I had some rap song cussing in the background. She was all embarrassed. I'm like, hey, them folks get in their car and play the same music after church. Ain't no different. Stop fronting. But today we're gonna go over some analysis on why I think betting on black is like betting on cryptos in 2018. Like, this is where you want to be, and really this will be a confirmation for all you hodlers out there. I know the market is, as far as Bitcoin and the market in general, is really pulling back hard. We're at critical levels, and we can go into that in a second. But you got to look. So cryptocurrencies, especially today, they're not in an isolated environment. Okay, so you have to think about why the type of money is being poured into cryptocurrencies. It's not all individual investors. Institutional money is starting to slowly trickle in, and when I say slowly and by a small amount, it's very small. I mean, our market cap is only around 450 billion, so it's not a big market. It's not a big financial market yet. Cryptocurrencies aren't, even though it seems like it is to us. Seems like everyone we know knows about and has Bitcoin, but that's just not the case. I think we have a little bit of normacy bias when it comes to that, because many of us live and breathe this stuff every day. But I was in quick story. I was in North Carolina a few weeks ago at a Top Golf down there. They got a Top Golf, and I'm at the register, and the lady says, what's your email address? And I started telling her my email address, Crypto Blood, at yada yada yada. And she's like, crypto? Is that start with, you spell it with a K, like KRI? I'm like, oh my God. And this was a young girl. She was like 19, 20. So we got a long way to go. But if you position yourself now, the rewards will be beyond your imagination, honestly. And I'll explain, in my opinion, why we are setting up in 2018 to see another huge wave up. And I'm not just saying this as a blanketed statement. Anyone can say that and be right. But I'm going to show you, in my opinion, exactly why I feel this way. Okay, and so we'll go over that. Let's first take a look at the market cap. We're currently sitting at 436 billion, down even further from yesterday. Bitcoin's dominance is up though, 39.4%, and a sea of red yet again, people, except Tether. Let's go ahead and look at the charts. because I told you guys that I felt like we would stay above this trending line, and we've clearly broken below. And there were two areas, two technical indicators for me: a support resistance area and a trending line for me that gave me that comfort. Plus we had a test of the trend line, not the trend line but the support resistance, and we couldn't break it. Then we broke through it. Then we tested the trend line as well, and if I zoom in, we actually tested it twice. If you see here, we tested 3 times actually. 1, 2, 3, and then we got slammed down again. This time we broke through. Not a good look. That's not a good look, and we are now below this area. So I was wrong on that. If I were actively trading Bitcoin, I would have had stops somewhere below here. I would have got stopped out and taken profit here if I were trading actively. But now, just to keep everything in context, this yellow circle I have here and this red line is a critical area. Okay, if we break below 9,400, we are going back, possibly, and it won't happen in one line. It won't look like, woo, won't be that, but if we break this area, then we were going back to this 7,400 area, I would say. So just keep an eye on that. And again, it's probably going to look something like, let me just delete this. It's probably going to look something, if we don't, like, I feel like we should bounce off of here and then try to test and get another score to get above there and head back up. Hopefully that's what happens. But if we don't, if we break, it's going to be nasty, people, because we're going to technically, we would be going, we would be, if we break below here, it's gonna look something like this. So let's just see what happens. But the article that I have, or not really, it's not really an article today. It's more just some talking points and my experience seeing the growth in Bitcoin and some events that happened back early when I got into Bitcoin that I wanted to share with you guys. And this is around 2013. I'm sure many of you know the whole financial crisis and the aftermath of that, from 2008, 2009, going into 2012, 13, 14. But in 2013, Cyprus, I don't know if you guys remember, Cyprus had a banking crisis. They stopped people from being able to withdraw funds from their bank accounts. They can only withdraw like 300 euros a week or a day, or 50 euros a day, 300 euros a week, something crazy. And many of the Cyprus citizens were starting to turn towards Bitcoin. Very small few, the savvy ones back then. 2013, it was, I don't even know what the market cap was of the entire crypto market, but because it was not a lot of volume and stuff, we saw, Bitcoin like really skyrocket, like it went crazy. So we're gonna go over all of that, and really the first thing we're gonna look at is inverted yield curves. And really, I just wanted to show you guys this part right here. This is where we're heading. Okay. Flattest in 10 years. So go back 10 years. That's 2008, right? Here's my thing with Bitcoin and cryptocurrencies. I believe that we are setting up for another financial crisis. And, you know, you've heard that, right? Everyone in the alt media is talking about that. But what I'm not hearing is why you feel like that in detail. So the reason why I feel that way is because we started our journey on to quantitative tightening last year. And if I'm sure many of you by now know what quantitative easing is it's when, you know, the Fed is pumping money into the system. They're buying back bonds. They're buying back real estate debt. They're buying back, in my opinion, even buying back equities outright. You know, it's not, you know, you don't see it that way. It's through very sophisticated means, but they're propping up through corporations. They're using corporations as a proxy to prop up the equities market, allowing them to, flushing corporations with a lot of cash. And what they're doing is doing stock buybacks. So they're buying their own stock and pumping the prices up. And they're able to do that because they were buying their own stock with cheap money, right? So that's been going on. And I'm going to show you guys a chart. Let me pull this chart up for you. So this chart really illustrates to me the end of our monetary system. So this is the adjusted monetary base chart. And before 2008 crisis, it was a steady increase, which is still horrible. But after 2008, this is the $1 trillion overnight. You remember that whole thing where, you know, the Federal Reserve was, you know, scrambling, trying to get stuff passed. Congress wouldn't pass it. And then they had to go back and do it again and all that. And they finally got the $1 trillion. That's pretty much what that is. That first spike. And from there on, people, it's just been money printing after money printing after money printing. So, you know, now we're here. We're, you know, in 2018, and they're starting to try to taper off. As you see, it's not as parabolic as it has been, right? So the second chart I want to show you is excess reserves of depository institutions. And before, there was none. The banks or the Federal Reserve didn't have any excess reserves. Okay, very few. And I mean, they did, but it was so small in comparison. We got this scaled. You won't even see it on this chart. Again, 2008, bam, we're starting to move up aggressively. This is basically QE. I mean, you can call this Q. I think you don't really want to consider this 1 trillion as QE, but after the fact, QE1, QE2, QE3, all this, and now we're tapering off. So that's quantitative easing, where they're printing money, essentially printing money. They're not really printing money. It's just punching stuff in the freaking computer. At the Federal Reserve windows and stuff, and allowing banks to then basically borrow money at nearly, it's free money essentially. But at any rate, what this has done is pushed bond yields down. So because basically the Fed is just lending money to these banking institutions, Wall Street firms. They've got this easy money. They want to chase a yield. They need to do something with this money. They're buying bonds, they're buying treasuries, T-bills, all that stuff. All the way from short end, all the way out to the long end, 30-year down to 10 and shorter. And so with them doing that, is pushing the yield curves down. The price of the bonds are going up, but the yield curve comes down. That relationship is inverse. So I'm sure many of you know that. But I'm saying all this to say now they are doing QT, which is quantitative tightening. And with quantitative tightening, they're stopping the buying. Okay? And essentially letting the bonds mature. And when they let the bonds mature, the money basically kind of just disappears. Once the bond matures, it's over. And no new bonds are bought. So the Fed will let the old bonds just mature and not buy any new ones. And doing that way the money just disappears and the balance sheet shrinks. And that's what they call quantitative tightening. Now, they want us to believe that they could print money for 8 years, people. They can print money for 8 years and it be, beneficial to the economy, right? But on the contrary, they believe that 8 years of printing and now all of a sudden they're going to turn around and do quantitative tightening and not have any effect on the economy. Like, I don't understand who they're trying to fool, but it doesn't matter if they tell us the sky is not falling or the sky is brown or whatever. We can see with our own eyes that the sky is blue. So with that being said, I feel like 2018 is setting up for an excellent opportunity for those who think ahead of the curve, look ahead, and try to, be there before the herd gets there. And the herd, in my opinion, really isn't the end user, the consumers, the people buying in Coinbase and Kraken and Robinhood. Nah, the herd are the institutional funds that will start piling in, because with quantitative tightening, in my opinion, what's going to happen is you're going to have basically they're going to stop buying bonds. So what does that mean? There's no one to buy the bonds. So in order to get people interested, other countries, institutions and stuff interested in buying bonds, they have to increase that interest rate on those bonds to make it more attractive for these countries and institutions to even be considering a bond buy. So as that yield goes up in bonds, the price of the bonds are going to crash. And we're already starting to see this unravel. The price of the bonds are going to crash. The yields are going to go up. And guess what? As you get toward, like your mortgage rates and all that are kind of set off of the 10-year note. As we see that start to inch up, I think 10 years now at, I don't know, like 2.5%, something like that. You got to remember, guys, the average 10-year yield on a 10-year bond, average over 30, 40 years, 50 years, I don't know how long, but a long time, has been 7%. We haven't been anywhere near 7% for a very long time, but we will start inching back toward that. What's going to happen? People with mortgages looking to buy new homes, it's going to cost more money to borrow money. So what does that mean? People aren't going to go get those homes that they could afford at 2.5%. or 3, you know, mortgage rates are like 3 and some change, right? They're not going to buy that house that's $400,000-$500,000 at that price. If the interest rate doubled, they've got to come down. They've got to buy a house for $250,000 or not buy a house at all. That's probably what's going to happen. So you're going to get a shift in demand, and it's going to get ugly. That's why I'm not too bullish on real estate from that perspective. I feel like, you know, we've been on this bull run for 10 years, like 9 years. We've been in an asset bull run. Inflation prices in assets have been just going crazy for 9 straight years. We can't keep this up for too much longer. Let's say we keep it up for another year. Are you willing to risk losing 50, 60, 70% of your investment for another year? We can't really time it. So in my opinion, guys, it's good to get into cryptos now, because this is one of very few asset classes that I think money will start to run to and flood into. So I think gold will do pretty well this year, because it's still manipulated, though. On the COMEX, it's not going to do nearly as well as it should do. But as far as cryptocurrencies, I believe a lot of money is going to pour into this space. So you just want to be in here. I mean, everything, and like Cliff High said, even the shit coins are going to rise. It doesn't matter. All of them is just going to shoot up in value, because we're going to have a lot of new capital coming into the space. So I just want to show you guys again this crazy chart of all of the money that the Federal Reserve has had on their books. So if I'm not mistaken, I think in 2014 they started doing what they call, the Fed started tapering, right? They started reducing the amount of money or bonds and stuff they were accumulating. So that's a peak, right? So we see that occurring, and now they're doing what we're calling, they're stopping altogether and doing quantitative tightening, where they're not buying anything and just letting these bonds mature until they, kind of mature off the balance sheet of the Feds. Again, I'm trying to keep it lay for you guys. But essentially, I just feel like this year is setting up to be like a 2008 repeat. Okay, I think we're gonna see a huge tightening in real estate. A lot of people are very leveraged in real estate right now, and I was talking to a buddy of mine. They're buying, they're looking to acquire more real estate projects, do this and that. And again, I'm not saying real estate isn't a bad investment. It is. You definitely should do that. But in my opinion, if people can't afford the homes, then there's going to be a shift in demand. The shift is going to come back to the left, and people who were looking to buy $500,000 homes, $1 million homes, are now going to be looking to buy $250,000 and $500,000 respectively. So this is a good opportunity for you guys to just hold tight. If you can, buy more. Or this is just my suggestion. I'm not trying to give you financial advice, but I'm just kind of giving you the landscape in which I think we're heading into for 2018. So let me know your thoughts about all of that. I know it was an earful, but I just wanted to kind of do one video. I've been meaning to do this video for a couple weeks now. But yeah, I mean, look at these yield curves, man. We're heading back to 2008. It's not looking good, people. Not looking good. So So the best thing for you or anyone in crypto is to either hold what you got or accumulate more. And that's cryptos in general, not just Bitcoin. So let me know your thoughts, people. Before I get out of here, I do want to say, for all of those who have purchased products in the last 2 weeks or so, 2.5 weeks, there have been delays, but those delays have been sorted out. So your order should be there in the next day or so. And for my UK, you know, I have a lot of UK, Ireland, Australian. I have a lot of those individuals buying products and merch from me. So I appreciate my UK people. Those products as well should be on the way. So you should get something in the next 5-6 days if you haven't already. But that's it, people. Make sure you jump over to cryptoblood.io if you do want to buy merch. We got hoodies, we got tees, a lot of good merch over there. And I almost forgot, this will be the last 2 weeks, and I'll remind you guys, but this will be the last 2 weeks that I will be having the micro Crypto Blood tees on the site. So these 3 will not be available in another 2 weeks. We're running out of stock on these, and we're not doing a new one. We're going to replace with some new tees. So make sure you get over to cryptoblood.io and pick you up one before it's too late. That's pretty much it, people. Make sure you like and subscribe, and I will holler at you people later. It's your boy. I'm out. Holla. Mama, don't play this at church.